Good morning, everybody. Happy Monday. Hope you guys are all doing well. Had a good weekend. Gonna get started here in just a minute or so. Gonna have a busy week here ahead with plenty of important earnings. So that'll be something to watch. And then, of course, the market's at a pretty critical juncture here that I will walk you guys through here in just a minute. All right, let's get started. Good. Okay, good morning, everybody. Happy Monday. April 28th, Monday. I hope you guys are doing well. Steady Trader, the steadytrader.com, Serge Berger here for our morning call for the day. We're going to go through our top few things here. I expect another busy week ahead. Usually is busy. We, on top of just the regular schedule and volatility, we are going to have a few earnings reports that are going to be more important than others. So let's get started here right now. If you are in our members area, you saw me post a chart yesterday, Sunday, with the S&P 500 levels. I am going to walk you through that one here quickly as well so that everyone can see, and then we're going to continue and trade this inside of our members area here shortly. So this is, if you're in Trade Ops, go into the research tab on the app and go check out that chart. And what is that chart? Let me bring it up here right now for you. In fact, let me bring it up as an actual image so that it becomes a little bit easier or even easier to see. And here we are. So we are going to have earnings from Apple and Microsoft this week, but I wanted to start this off here today, this Monday morning call, with a glance at the technical levels of the S&P 500. And this is technical, but it's also incorporates sort of psychology of investors. What you're looking at here is the SPY ETF, so essentially the S&P 500. And you can see that we had about a 20% peak to trough drawdown, so from February into early April. We then had a very wide trading range that scared a lot of people. And we are now bouncing into an important resistance area. Now, when you have more volatile markets, resistance isn't like a point. It's not like a specific line that you can just draw. It tends to be an area. And so this resistance area here is about 4 to 5% wide, and it's roughly from about where we are right now, so call that 550 on the SPY. Yeah, about 550 on the SPY to maybe as high as 580. Because we have volatility, remember the VIX is still, well north of 20. So you're going to have to start to learn to draw your lines with, with a crayon and not with a pen or a pencil, because you're going to see more gyrations, and thus, specific levels aren't going to hold exactly all the time. So I think this is resistance up here in that area. When does that resistance become a turnaround point? I don't know until we've had a reversal day. But if I was long equities, irresponsibly long Max 7, which most of you probably are, liking it or not, go check your 401k, your IRA, your whatever you have. Through the lens of education, this is probably a good a spot as any to start balancing out that portfolio and do the right thing in our view. Again, education here, not advice. Now, why is there a psychological aspect to this? This gets us to where, if you look at the upper box here, it says trapped buyers. This is an important concept. I know it hasn't mattered in like 10 years, but it's going to start mattering here, we think, this year. And so what you had is a lot of people basically long Mac 7. And then right here, this point here is when we had the election. And I believe it was November 6th or November 7th when the market gapped higher. And you can see from there on, it was just a chop fest. So a lot of people who bought up here, and trust me, a lot of people did. We know a lot of investment advisors did. We know a lot of individual investors bought, dumped all their international stock, and went all in on Mac 7, even more so than they already had. And those people were then delivered a drawdown of about 20% on the S&P, much more so on certain individual stocks. When we basically came into February. And what we're now seeing is just an oversold bounce for those of you guys using the Vertical X Pro, where we get the extreme overbought and oversold ratings. You saw us talk about that in real time over in the members area. If you look at, for example, just quickly bringing up Apple here, all those stocks, like 20 pages worth of stocks, ETFs and futures, got oversold all around the same date, April 7th, April 8th, and we've bounced. And that's what's led to this bounce now. Now, again, can we go another, 1, 2, 3, 4, 5% higher from here? It is absolutely possible, but it doesn't have to be. So from a timing perspective, for us, we are now starting to look at better shorting opportunities again through the lens of sometimes some of them maybe just a few days, some of them might be a few weeks, a few months out. So these trapped buyers up here are going to be very happy when they're able to get out of their longs, or at least get out of some of their longs, relatively unscathed. And we think we're now in this area or entering this area. And so that's why you have these trapped buyers, and that's why we think 580 is probably about as good as we could get on the upside. Again, I'm more than happy to be surprised on that, but I think it's a good level here to start looking to sort of getting out of some things. What does that mean in terms of the very, very near term? Well, we're going to switch on over to trade ops as soon as we're done here in a few minutes. But if you are looking at the daily charts, at the intraday charts, you will see that on the SPY ETF, we do still have room up to, in the very, very near term, this is like maybe today's business, up to about 565 or so, 564. That would fill the down gap from Thursday, April 3rd. So that would basically get us all the way back to retrace the entire tariff day, Liberation Day sell-off. I don't know if we get there or not, but we're in a good zone here, even in a more near time frame to start looking at that. Now, the inverse of all of this, of course, would be volatility. So let's have a look at volatility and see what the VIX looks like here, which is the S&P 500 Volatility Index. And if the S&P 500 is coming into resistance, then we would think that the VIX might start becoming into support. And if you were here over the past couple of months, you heard us talk about that the VIX around 60 was kind of a no-brainer to start, shorting some volatility or i.e. buying some risk assets, some stocks for a trade. We made a big deal about it, did in real time. But now in the near term, we're getting back to the sort of low 20s. And I would argue that somewhere in here, be that, from roughly where we are right now to maybe down into like the 20-ish area, we're going to find support, right? And so if you think about this from a dealer or from a hedge fund perspective, people that are looking forward and not just looking at the next 5 minutes are going to probably start saying, you know what, volatility was a bit rich for me when it was 60, and that's what I was just saying before a few weeks ago. But now that it's back in the low 20s, maybe it's going to be a better time for me to hedge and put on, and so we think we're probably going to find some sort of support here. This is just the inverse of the equity of the S&P 500, right? So that's the S&P. Hopefully specific levels. Hopefully this is valuable for you guys. VIX number 2, and then I do want to talk about uh, two stocks that we mentioned last week that I'm watching very, very closely. And that is the broker-dealer segment. So you're looking at Morgan Stanley, you're looking at Goldman Sachs. We can draw very simple levels. We can use simple moving averages, like, for example, the 200-day moving average, the red line here, for Morgan Stanley comes into play around here. Goldman Sachs the chart looks almost the same. You can see we're also at that red line resistance 200-day moving average. We've now filled, gotten back into an equilibrium price point. So these are some names that I'm looking at to maybe start doing some option spare call spreads on. Maybe some other ways of maybe going back short. Again, it doesn't have to be that we're going to top out right here, right now, but I think the reward to risk on the short side through a multi-day, at least maybe multi-week, multi-month lens is getting a lot better up here than it's been in a while. The other thing I do want to quickly mention while we're on sort of the beta trade and looking at the S&P 500 is, in fact, let me just bring up this chart again. I would expect the next leg lower, unless it comes on a real shock event, to be more of a drip, a slow and steady drip, a little bit more torturous, not to sound too morbid, than sort of the knee-jerk, volatility jump that we had. And for most retail investors and most investment advisors, they are probably not going to start considering selling stuff until we start breaking lows, the lows back from April, if we do. I mean, I think they do, but it's going to take time. I had breakfast earlier today with a very smart macro investor, an ex-colleague of mine, when we used to work together at JP Morgan, and we were talking about 2007, 2008, 2009, working on the trading desks. And one of the things that we were discussing is how long it took for the market to essentially bottom out or even really get into the real shock phase back then. So I remember in 2007, and I can show you this even on the charts, we at JP Morgan at the time were working on a deal, a high yield deal, a leveraged buyout basically, where which failed. Basically we couldn't place the bonds. And so this was, I'm just going to give you a little bit of history on this. This was right there. So this was it was June 2007. So around here, there you go, like literally right here. Okay. Now, at that point, from that point on, until the market started really breaking down, it took more than a year, right? So you could easily envision right now a market that is going to be choppy. We might get some big rallies along the way. And again, it's not going to be the same playbook, right? It's going to rhyme, but not. But my point is not to give you an exact timeline because I don't have one. No one has one except some geniuses on YouTube that have been in the markets for 12 months. They know everything. Notice my sarcasm. But what I'm trying to tell you is that the next leg lower is, in my view, going to be more of a drip. Again, bearing any major catastrophic outside news, then it's going to be just constant dip, constant sort of, lower highs as institutional investors are now going to sell. Again, most investment advisors and certainly most retail investors are probably not going to be doing anything to their portfolio. They haven't done, most of these investors, retail and RIAs, have done nothing, like zero to their portfolios. And they're not going to do anything until they make lower lows. That's typically when you start to see that. So you choose yourself what you want to do, but I know that everyone's long Mac 7s. It's still the favorite trade for everyone. So typically that doesn't hold a lot of water. I want to quickly switch to one individual stock, and that individual stock is Uber. I'd like to put something in your ear and give you a little bit of context on that stock. First of all, just for a little bit of context, Uber is going to report earnings basically next week, so a week from this Wednesday. I have a longer-term view on Uber that is possibly going to be very, very bullish. I don't know what the hell happened to my chart here. Oh, here. Okay. All right. So this is the long-term chart of Uber, and I think this could be one of those super app trades. Again, this is, you have to see the breakout first before anything, but I have $86 circled on Uber, and this is not a trade for today, tomorrow, or even next week, but like really something to kind of potentially see a multi-year run in. A lot of this has to do with robo-taxis. Uber, by the way, is taking over the robo-taxi technology from, or using the robo-taxi technology from Volkswagen. No one talks about that. Everyone always talks about from Tesla as if that's the only game in town. It's not. There are others, right? That's not, I'm not bearish Tesla. I'm just telling you that's the reality. There's other players. And so, that's when I'm watching very closely. How high can it go after that? I don't know. We'll be trend following it, right? But I just want to put this in everyone's here. So that's it here for a Monday morning as a sort of opener to the week. Good luck out there. I'll see you guys over in Trade Ops. Please, 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 very important. This is important. Please subscribe to the channel. We're just about to cross, I think, the 5,000 subscriber mark. We want to get to 10,000 obviously as quickly as possible. So if you could please share the word, share with everyone what we're doing on this on the YouTube channel. Have everyone subscribe to the channel. Give us a thumbs up, like that would really help us to grow the channel and give us more resources to make it better and have good guests and stuff like that. So thanks all for being here. Have a good start to the week, and I'll see you over in Trade Ops and back here tomorrow morning at 9 o'clock Eastern. Take care.